All right, everyone, welcome to the Print Fam podcast. I'm Darren, the founder of Print Fam, and today we have Josh Pyne from Paramount Tax and Accounting. Josh is my accountant, and I thought it would be great to come on and have him answer some of my questions and some of the questions that I got from the community. But, Josh, could you give us a brief introduction to yourself before we just go through all of our questions?
Absolutely, yeah. Crazy to think back, but I think we've been working together, Darren, now almost 8 or 9 years, which is crazy to think that it's been that long. But that's just the tip of the iceberg when it comes to my accounting experience. I've worked in this industry for uh, 19 years now, in a facet of different expertise, whether it was corporate accounting, forensic accounting, small business bookkeeping, tax planning, tax strategy. I've delved into a lot of it, both in a corporate infrastructure as well as a independent business owner, similar to Darren and many of you out there listening. Um, and so that is what we do. But at Paramount, we offer a variety of services that uh, help small business owners, help individuals either organize their life from an accounting standpoint or help minimize their taxable situation or just be there as an advocate when you have something that you may not know the answer to.
Well, that leads in great because I actually emailed you today because I got a letter from the Labor Commission, and you're helping me work through getting that solved. Like, it's basically a clerical error, and it's mostly my fault, but Josh is there to help along the way. And I remember because I think we started working together like 2017, 2018, somewhere in there, and I was super nervous. Like, every year, I remember having problems at the end of the year with getting taxes because my books were screwed up. So kind of my first question is like, when should people decide to outsource their accounting or get help with that? And is it accounting help? Is it bookkeeping help? Like, what's something that like people should be aware of?
Yeah. So that is always the question that people pose of, when should I hire you or when should I get an accountant? And that answer varies depending on the business, depending on the business owner, depending on the time and resources that you have to be able to allocate to your accounting. And so there's no one definitive answer to that. Usually, when we really start encouraging people to hire out an accountant is when you're behind. So if you get further than 1 month behind on your reconciliation or categorization of accounts to where your books aren't living in a present tense, that's usually a good indication as to when you want to hire someone. And that may be at 10 transactions a month. It may be at 250 transactions a month. But usually, whenever you fall behind, more than a 30-day calendar period, is when you'd want to start, resourcing that out so that you can stay up to date on that accounting.
So that ties really well with the next question of like, what's the difference between like just keeping up on your books and actually having your books so that you can make good decisions in the business?
Yeah. Um, Keeping up on your books is just a a good defense mechanism so that if anything were to ever happen, and you need something to use for lending, for financing, for loan qualification, whatever the case may be, keeping up on your books is a good defense mechanism to always make sure you have those in your arsenal to provide if needed. But that's just the tip of the iceberg. So um, I usually say keeping books is like playing defense, but using books from a sports analogy is playing offense. And so if you have up-to-date books, uh, that's a great start. But if you're not using them to make decisions, whether your pricing is in line, whether you're planning potential future hires, whether you're looking at buying a piece of equipment, um, having books that you can utilize to make strategic decisions as a business owner would be the next step beyond just keeping books up to date, because they have to be kept up to date in order to run your tax return at the end of the year, or to do some other things from a compliance standpoint. But taking that information and going another step, using it to your benefit, is when you really can start to implement yourself as a business owner that's playing on the offensive instead of just reacting defensively.
So with that, there's a lot of terms that go around in the industry. There's bookkeeper, there's accountant, there's CPA, there's EAs. Can you kind of cover the difference between them, and should someone have all of them or one of them, or at certain times should they have one or the other?
Yeah, so usually, there's a lot of terms that are interchanged, and depending on what it is that you're wanting out of those terms will, change that definition. But usually the bookkeeper is the mechanic who's making the engine run daily, right? They're the people that are in your books on a regular basis. They're categorizing the transactions, they're reconciling the accounts, they're making sure everything is clean and up to date in there. But that's about the extent at which the bookkeeper will be able to do. So if you're looking for, advisory type services, tax planning, something strategic beyond just the reconciliation and the data categorization, then you'd want another team member in your arsenal to be able to help facilitate those services that you'd be looking for. So a lot of the times the accountant bookkeeper are interchanged dependent on the skill set of the bookkeeper, because those could be the same person. If your bookkeeper also has enough knowledge base or enough skill set to be able to offer, the accountant related aspect, which would be one step higher than bookkeeper, that would make sure that, you know, would be able to strategically help you with the previous question that you asked on how to use the books to your benefit, not just keep the books. So the bookkeeper would essentially keep the books. The accountant would be able to help you find metrics or find ways that you could use those books to your benefit. And then a CPA, EA, depending on what it is that you're looking for, if you get to be a big enough conglomerate that you'd like, heavy duty CFO services, or a forensic accountant that also acts as a comptroller, you could definitely go that CPA route. CPAs can also do your tax return. So a CPA is like a Swiss Army knife from an accounting standpoint. But a lot of the time, they're definitely more versed or more skilled in one particular, streamlined service of accounting. Uh, and so uh, they can be a number of different things. So finding a CPA that you'd want in that toolbox to help you is really just dependent on that CPA skill set. Um, they could also be, a tax preparer, tax planner, strategic planner, something like that. An EA would be very similar to a CPA in the role of the tax realm. So an EA is a licensed practitioner. They have to carry continuing education credits. They have, it's a license that you have to maintain on a regular basis, but you're only operating within the tax realm. It's a federal license that you hold by the IRS, to represent and specifically work within that tax realm. So you wouldn't necessarily need a CPA or and an EA for just the tax world. And most businesses that we work with wouldn't ever need both of those. Usually, bookkeeper, accountant, and then EA would be sufficient enough, or vice versa. Bookkeeper, accountant, and CPA would be sufficient as well. For a lot of the clients that we work with and we represent, we just have one person who's able to do that, because they act as both the bookkeeper, the accountant, and the tax professional that holds either a CPA or an EA license, because we have both in our firm. So
So with that, you talked about like fractional CFO and forensic accounting and stuff. Is there a revenue number that people should usually look at certain tasks or certain upgrades, I guess, in how they manage their books? Or
yeah,
is it like what metric should people use to determine kind of like where they are, I guess?
yeah. I mean, and that's really personal preference. When you look at fractional CFO or those types of services, a lot of firms will have them on an a la carte basis. So you may want to just pay an upfront advisory consultation to say, let's dig deep into my numbers. Let's figure out some metrics. Let's look at some KPIs, and really see where my business potentially is thriving and where it could use some help. And you could pay for that service once and then not need it again for another year or 2 years, or depending on what type of business owner you are, if you're one who's hired out a lot of the day-to-day aspects of the labor and are focusing mainly on building the business, you may have a lot of the tools and necessary skills to be able to be your own fractional CFO, and just may need, you know, quarterly check-ins, or, you know, once in a while tune-ups to make sure that you're not being biased towards your business or potentially leading your business astray with some blind spots. But those services are personal preference depending on what it is. I work with some fractional CFOs with businesses that, are barely breaking into $20,000 to $30,000 a year in revenue. But they're looking for strategic ways of being able to grow their business, and making sure that they're dialed in on their profit margins and things like that, so that as they grow, they're growing more profitably, and not having to potentially go back to the drawing board because they spent too much money in certain operational expense categories or different things like that. And I work with businesses that make millions of dollars that still don't think they need fractional CFO services, even though they would benefit drastically from such a thing. So it's really personal preference. And because they are fractional, they are very much a la carte. You can certainly pay for them as you need them, or pay for them as you want tune-ups, but they're not anything, especially for small businesses, that would be a requirement that you would need to run your business day to day.
So that leads really well into my software question. I know probably most people are aware of QuickBooks, but there's like Zero and Wave. From your perspective, what is your recommendation as far as the software side of things for people?
Yeah. I'm very biased towards QuickBooks for a lot of different reasons. It's definitely very competitive from a pricing standpoint. I was actually just at the Intuit conference in late October with a rollout of all the new features that they're planning on bringing for both the customer as well as the accountant. And they're on the cutting edge of so many aspects of this particular industry from an accounting software technology, to help both customer and accountant bridge the gap from a communication lapse, because accountants aren't great at speaking in layman's terms. But also, too, small businesses have the capability of having a resource that will be able to help them provide accounting, um, so that if they're not wanting to hire someone, they have the tool necessary to be able to at least deliver a product to their accountant at the end of the year for tax purposes. Um, but because they are probably the biggest conglomerate from an accounting software standpoint for small businesses, they have the most integrations. They have, they speak to most of other softwares as a service apps. Uh, they have a phenomenal customer service department. And so you're going to come across more people that are familiar enough with that software to be able to, if you need help, get the help that you need. Zero is a very competitive product to QuickBooks. It's not nearly as large, but to get the support that you would need from that is a little bit harder. It's a lot harder to navigate. It's not nearly as user friendly, but definitely an alternative if you're looking to go that route. From a price point, they're very kind of they're almost identical from a price point standpoint. And so, if for longevity, I always try to structure my business in a way of, let's pick something that I'm not going to necessarily outgrow, because I have very audacious goals of where I would like to take my own business. And so I don't want to have to switch softwares, you know, 3 years from now, 5 years from now, if I potentially outgrow one. And QuickBooks is never, they're small enough that they're great for small businesses, but they have the capabilities, if you do outgrow the small business features, you could grow all the way up to their enterprise feature. And so you're never going to have to teach your team a new software. You're never going to have to do anything like that. And because it is the biggest, most accountants know how to navigate. And so if you wanted those quarterly check-ins or those tune-ups, your accountant will probably be able to help navigate and not spend as much time trying to figure out the software and more time trying to help you within your business.
So, with help within the business, I want to ask some pointed questions. Most people in my audience are just like me, print shop owners. You've been doing my books for a long time. You may have other customers that are very similar to me. Um, but in the realm of my style of business, or even with my business specifically, um, what is the biggest mess that you've had to fix in someone's books?
Yeah. So this would be, very applicable to your business or any other small business for that matter. The biggest mess I came across was just that this particular person who was running their business waited a little bit too long to hire an accountant. They thought that they were doing a good job navigating it on their own, and in their second year of business, ended up doing almost $1 million in top line sales. And so, in the first year that we worked with them, from a tax standpoint, there wasn't enough activity to really mess anything up or do anything that would have been detrimental to the accounting or tax reporting or anything like that. And then, fast forward 13 more months, and he did a phenomenal job of running his business and creating income, and he was a great salesperson. But then when we got the books to do the tax return, the they were just items that should have been on the balance sheet were on the P&L. Things that he had deducted were not eligible for deduction. Things that were on the balance sheet should have been on the P&L. And so it was a very costly mistake on his part because he needed to file his tax return to be able to purchase a home. And so we were up against a tough line with that. Plus, we were in the thick of tax season, which time is very precious at that moment in time. And so he ended up paying a very hefty cleanup bill for us to go through and house clean his financials to a respectable standpoint that we could provide a P&L and a balance sheet to the loan officer as well with the tax return. So even if you can do the categorization yourself and you are doing it on a monthly basis, understanding where things are supposed to go, just because you want to see it on this particular report or under this particular category, there may be some organizational things that just don't make that a realistic option. And so working with an accountant to get a financial statement that you can understand that works for you is another thing that we do with a lot of small businesses is help them organize their chart of accounts in a way that speaks to them so they can understand the health of their business as well as educating them on what they can and can't expense on the P&L and what items would necessarily need to go on a balance sheet. And so that was the messiest. It took us like a good 35 hours of nonstop cleaning up of books, which had we have been doing the accounting, throughout the year, it would have probably saved him, $5,000 or $6,000 in accounting fees. Uh, if we would have just stepped in sooner or if he would have had a better idea of what he should have been doing.
That's kinda how I felt. I was always behind and always having problems, and I was paying a big bill at the end of the year to fix everything, and so that's when it was like, "I just need to offload this. I need to not worry about it and have you on my side so that when I have questions, it's just like today. I got this in the mail. I don't know what's going on. What do I do?"
Exactly. And one thing, uh, just as you're looking at this, it's like, well, if I'm doing the accounting, which isn't making me any money, is it taking away from time that I could be making money on my business? Because a lot of the time, the value we bring in either helping you organize your business or just the time we freed up for you to go do other revenue producing tasks, usually the accounting is paid for in that aspect itself. But then also too, like if you have an accountant that you're working with on a regular basis or a bookkeeper that you're working with on a regular basis, they usually can provide value in other things throughout the year that help one offset the costs of the accounting, two, the accounting is a tax deduction in itself, and three, hopefully they're providing you with other strategies aside from the accounting that they're doing that will help reduce the taxable liability, whether it's, you know, accelerated depreciation, whether it's purchasing equipment, whether it's making sure that there's deductions that you're not forfeiting. Because if you just send us your books in March, we don't have the time to comb through them enough to see like, hey, do you have this expense that you probably spent money on throughout the year that it just didn't make it to your financials, or you know a lot of different things like that. We can't really coach you up in the time crunch that we have in tax season. So working with someone on a regular basis can also help create value for the accountant to not only offset the costs that they would have, but also benefit you as the business owner with other strategies or other things that you could be doing to help your tax situation.
Well, yeah, you and I usually have a meeting before the end of the year to discuss, okay, this is where we are from a taxable liability. Like, usually it's been, yes, you could pay yourself this much more and not pay any more in taxes, but I haven't been in a position to be able to pay myself more. But at least it's good to know where we're at and what's going on, because we talk about my equipment leases, we talk about where I am. Should I spend money? Should I not spend money? And there's pros and cons to both. And you walk me through it and help me. And like, I gladly pay every month for you to do this so that I don't have to worry about it, because it's just been kind of a load off of my shoulders. Um,
And
one
I know,
thing that was, oh, go ahead.
well, and I know for you, and I'm sure for a lot of other business owner, that just the thought of accounting or taxes or whatnot can be very stressful. And so we really try to build relationships into this aspect. And so I know a lot of the conversations that you and I have, also because we're within the same township and it's easy for me to stop by your shop, or, I also use your services, which, is very helpful. But a lot of our conversations are very casual conversations. And so, we are taking new clients. And so any of you that are listening that are like, hey, I'd love a consultation or anything like that, we're happy to offer that. But also too, if you find someone that you can genuinely connect with or have a working relationship with that can help ease the stress and anxiety surrounding this particular topic. uh, I know that you've mentioned multiple times, just at whether it's grabbing food at Neaters, or whether I'm dropping stuff by your office, or you're dropping products off at my house, that a lot of those casual conversations can go a long way in helping ease the burden and anxiety that taxes and accounting can generate. And so, uh, finding an accountant is good, but finding someone that you can just have a conversation with, um, is finding the right fit for your business is going to be the most crucial. So,
Yeah, and we'll definitely have Josh's information in the description. So if you guys want to reach out to him, highly suggest him. I've referred multiple people to him. They've all loved him. They've all, like the most recent one, they were like, thank you so much. We had a tax liability and he was able to figure out that we screwed up our books and now we're getting taxes back. And so Josh and his team do a phenomenal job. So we'll have all his information down in the description. But some of the questions that we got asked that I want to go over from the Facebook group is, can you go over receipts? Should people keep them? Should they not keep them? Should they keep specific ones? What is the best or the suggested practice for that?
yeah. So I'm never going to ask for your receipts. So you don't ever have to worry about trying to you know, figure out how to get those to me if we end up working together or whatnot. I service clients all over the United States as well as internationally, and so having to deal with collecting, all of the digital components of your day-to-day transactions is quite burdensome. So I'll never need those, but it's a good habit to keep as many, if not all, of the receipts that you can. They don't need to be uploaded to QuickBooks. They don't need to be uploaded into a receipt keeper. They don't. You just should have a copy of it in case worst case scenario happens. Um, and as detailed as you can be with those receipts, the better. So for me and my team, and this is what we do is, all my employees that have company cards, if they have the autonomy to be able to purchase or spend money on the company's dime, they just are required, if it's a meal, like if they took a client to eat, or if they did something that would require a summary on that particular receipt, to just jot it down, which is really easy at a restaurant. You're already given a pen, you're leaving a tip, you're signing. I usually just tell them to put what it is, capture a picture, and that's that. Most in today's world, most receipts are digitally. I know that when I pay Darren for his services, I get an emailed copy of my receipt after completing the invoice anyway. So a lot of times you're getting those digital receipts as they come in. Any physical receipt, whether it's for fuel, whether it's for meals, whether it's at a supply store, it's really easy to just capture a picture of that on our phone. I know most of us don't ever have our phone further than 2 feet from us at any given point in time. And that would be sufficient enough. I throw my receipts away at the gas station. I throw my receipts away as I leave Costco, as I leave the grocery store, whatever it may be. But it's easy to capture a picture of it. And then at the end of my week, Sunday's the day I've allocated to this for admin stuff. I just go through my phone scroll and select all of them, send them to me in an email. It comes into my inbox, and I just allocate it to a receipt folder in my inbox on my email in the year that I am. So right now I have an inbox folder for 2025, and all the receipts for me and my team and my company are just sitting in there. And so that's the if the IRS ever comes knocking or anyone else wants to audit you for any particular reason, you can let them sort through all your receipts. You can just be like, hey, here you go, and dump 350 emails over to them or however many you have, and they can sort through them. But then at least you'd have the backup copy of that. If you don't have the receipt, it's not the absolute end of the world, especially if you know McDonald's is McDonald's. It's going to be hard to argue what you bought at McDonald's, and so you could probably justify that as a business expense. If you go to Best Buy and spend $1,000, they don't know if you're buying a fridge for your house or if you're buying a new computer for an employee, because Best Buy has a variety of different products that you could purchase, and so there is the risk that they may disallow that particular expense because there is not a proper enough backup on either on a credit card or a bank statement to justify what you bought as a business expense. A lot of businesses now will let you go back so many months and pull receipts if you gave them a phone number or an email address or a name. So there is things that you can help navigate through that, but don't stress if you haven't been keeping them up to this point. It's just that on a going forward basis, try to be as detailed as you can, um, while also making sure the process is as simple as possible and not taking up hours and hours of your time. So.
Does QuickBooks have an easy way to manage receipts?
No, they don't. At least not from what we've understood. There are other receipt uh, dockets out there that connect with QuickBooks as well, but each one you still have to s- take a picture of the receipt, upload it into the software so that the receipt is tied to the particular expense. But again, that's just so time consuming and monotonous, and you would need, a part-time secretary to be able to do that, at least for the amount of transactions we do a day. And so, in working through half a dozen different audits, the IRS is still going to ask for the receipt anyway, even if you've attached it in QuickBooks. And so you're going to have to then go pull each individual receipt from QuickBooks. They're not going to do that for you. So I always just say, simpler is better in this scenario. And so if you can just save it digitally somehow, whether it's in Dropbox, whether it's in your email, whether it's in a folder on your phone, that's all that matters is you can retrieve that at a moment's notice. And there's not it, in my personal opinion, it's not worth wasting additional time trying to allocate it to a particular expense in an accounting software. I know certain banks will allow you to upload receipts to certain transactions as well, but to me that just seems more time consuming than what you would actually need it for. So
So that ties really well into the other question of what about like vehicles, mileage, things like that? What is a good or proper way to do that? Because like I'm very different than my brother's business. My brother has like 30 trucks that he has. So like what is the recommendation for that?
yeah. So as a single business owner, and if you're writing off a vehicle, then you can write that off. Like where within your brother's business who has a fleet of vehicles, he probably not like his employees aren't expected to probably keep a mileage log, and he's writing off all the fuel that they're spending anyway, and they're probably driving those vehicles for personal use and different things like that. And that's a different category than like a small business owner that's a single owned business, or you know a one or two business owners. And so it kind of varies depending on situation. whether you take the mileage deduction on your tax return or you take the actual deduction on your tax return, technically you're supposed to keep a mileage log regardless. Now, I would say that less than 5% of the businesses that I actually work with uh, do that. So, from an advisory standpoint, I'm telling you what you should be doing, but just note that the majority of the general public do not keep that. Um, the mileage log can be whatever you want it to be. There's a lot of softwares in today's technological age. There's a lot of softwares that, you know, are on your phone and just tracking your activity in the background. I use one called Miles IQ, and it just, whether I'm a passenger, whether I get on a train, tracks, whether I get on a fast bicycle, it will track anything over a certain speed that is there, and it gives me like the start point, the end point, how long it was, what time, X, Y, or Z, and then you swipe right for a business drive, left for a personal drive, and again, I just do that on Sundays when I get my phone log. Between my mileage and my receipt capturing, it takes me like 7 to 10 minutes, maybe a week, to upkeep. So it's not an overly time consuming aspect. I do it because I obviously don't want to uh, expect something of my clients or advise something of my clients that I'm not doing myself. Our business has a handful of company cars, and we use the actual as the expense. So we're writing off the fuel, the maintenance upkeep, the different things like that. I do have a client that has an electric car. Uh, they do, so obviously they want to go more the mileage route, because it's a lot cheaper. Or sorry, it's a lot cheaper to own the electric car from a fuel maintenance thing like that. But then there's no tax deduction, so they opted into the mileage deduction when they purchased the electric car, and so a lot of people are confused of like, can I still write off the vehicle if I'm taking mileage? And yes, you can. There's a lot of different misconstrued uh, things out there with vehicles and how you can write them off. So just being consistent is the most important thing with the IRS, and then also uh, just understanding what you can and can't do with different vehicles and things like that. But uh, you should technically be keeping mileage, even if you're writing off the actuals. If you're not writing off the actuals, then you definitely should be keeping track of mileage. Um, but that probably doesn't answer your question as much as you'd like to have had it answered.
It just makes it really, and it's really complicated. That's why you need a professional to help you.
One of them for complicated aspects to taxes, to the accounting, because if you're using the business card for fuel, but you're taking the mileage deduction, that's not going to necessarily be reported on the financials unless you're properly reimbursing it and backing out the fuel. So there's a lot of things in there that definitely make this aspect of it complicated. But once you kind of get into the groove, it doesn't complicate it. So, and it is on a like a per basis situation. It is unique per business per car. So
So that also, I guess, between the receipts and the car, that also goes into the other question that people had about mixing personal and business. Um, like you were saying, like going to Best Buy, buying something, having it notated so that it's not like a fridge for personal use. Like I provide food for my employees. So we buy bread, we buy sodas, we buy chips, we buy ham and cheese and different things that, like, for all purposes, if you looked at that receipt, you'd be like, oh, this is a personal receipt. So how, like, wh- what should people be aware of, or how should they make sure they document things,
yeah,
personal versus business versus like my wife doesn't work for the business, but we talk about business all the time. I treat her kind of like an employee, though she's not, and we discuss situations. How does that work if we go out to dinner and talk about business versus taking out like a business person that we're having a business meeting? Like if you and I, like we've gone to Neaters before and talked about stuff like where, like personal versus business, for like what should people be kind of aware of or
yeah.
recognize?
So I'll start with no one's perfect, myself included. There's been I bank at Chase, and I have a personal Chase credit card and a business Chase credit card, and it's happened where I've given my wife the wrong card to use, or I've swiped the wrong card because they look the same. And as easy as it is to look at the name that's on the card, mistakes are going to happen, right? So that's the when you understand that perfection is unobtainable from making sure you don't mix personal and business. Uh, it's just how often is it happening, right? So the IRS understands that there's going to be implications where something like this takes place, where you use your personal card for business and vice versa. If you use your business card and it should have been a personal expense, just make sure that it's not counted as an actual deduction. If you used your personal card and it should have been for a business, then making sure that you add that personal expense that should have been a business expense to your financials and properly reimburse yourself for it. So there's ways around that. And then the other thing is making sure that, like, if you were to look at your personal bank account and all of your personal transactions, and you were to look at your business, taking that audit personally and seeing, does anything look fishy here? So, like you said, I also feed my employees during tax season, and so I go to Costco, and then we also eat out occasionally, and I'm demanding 80 plus hours a week of my employees during tax season, so I provide all three meals. So, and we have a small kitchenette in our office, so it definitely looks like I'm just buying groceries, from eggs to bread to all sorts of things. But if you were to look at my personal transactions as well, I also have grocery store expenses. I also have Costco expenses. And so it's not like, okay, well, he's just writing off all of his groceries. And then also, if they were to come in and look, because most of those times, those audits, you can provide a physical evidence test. All I would have to do is take a picture of my fridge and break room during tax season, and it would be easy to indicate that, that is being provided to employees. Um, and so it's just a matter of, can you argue it? As annoying as it is when you're going through the Costco line or the grocery store line or Best Buy line, having to do two separate transactions, if you're mixing the shopping for both personal and business, that definitely can add a little bit more time to your day, in a day that time is already precious and valuable. But taking that extra handful of minutes to make sure that you're compliant, and you're not just like, okay, I'll just run this whole transaction through the business, and then I'll just personally transfer money from my bank account to the business bank account to reimburse the expenses that should have been personal. That's where it can get. That's where the IRS could argue, well, we're just going to disallow everything because you're not trying to separate anything at all. You're always doing it after the fact. And so, as long as you're doing things like where, all right, my family goes to breakfast every Friday morning, even if we talk about business, that is a family outing for us that we're going to always deduct as a personal expense. But there are plenty of date nights that me and my wife are out to dinner, whether it's literally driving through the Costa Vida drive through, or whether we're going to a nicer sit down dinner, depending on what time and allocation we have, that those, the majority of the time, will get ran through as a business expense, because she is my sounding board, or my trauma dumping therapist for all the clients that I've had to deal with, or just different things like that. So it's just taking that personal audit of, am I writing everything off through the business? If so, maybe we need to transition some of the groceries over to the personal side, or vice versa. But you could also argue that on the personal. If you look at your personal and you're like, I only have 2 business meals a month, and we're going out to eat 4 times a week, you probably can move more of those over to the business. So it's just having some balance and understanding that no one's perfect. They're going to make mistakes on having personal expenses on the business, and business expenses that should have uh, gone through the business and not personal cards. But then also making sure that there is some balance with your expensing things.
I am probably been a part of those trauma conversations with your wife.
Not at all. You definitely do not give yourself enough credit for how organized you are and how on top of it you are. And I know that you stress about it, but uh, if I could get most of my clients to act like you, it would be a godsend. So,
Well, thank you, because I definitely stress about it all the time. And one thing that I do stress about a lot is sales tax, which is the next question on the list. I have a bunch of questions related to it, but I'm sure we can just summarize it. one of my biggest pain points and things that I struggled with was what sales tax. And I finally was just like, Josh, please just take care of it for me. So now you do the filings for me. My life has been so much better. I know that filings can depend on where you live. They can be monthly, they can be quarterly, they can be all sorts of craziness. But there's
Yeah.
also then sales tax nexus that is a somewhat new thing. Can you just kind of educate people a little bit on some sales tax tips or help or things that they should watch out for?
Yeah, absolutely. So every state's different. Um, and so understanding the nuances of your state are going to be the first priority of figuring out whether or not you need to pay sales tax. Uh, Nexus, you mentioned Nexus. Nexus is just the state's way of saying, hey, you're making money here, give us our cut. Now, that cut can differ depending on how you do business in that state. But that's kind of what Nexus is, hey, you're making money here. We want to make sure we're getting our piece. Uh, what creates Nexus is employees, contractors, inventory store, fulfillment centers, sales volume, and transaction count. Uh, and so, depending on looking at those, are like, okay, what would provide, Nexus within my business? Because if everything's located in, you know, St. George, Utah, and all my employees, all my contractors, my inventory stock, X, Y, and Z is right in this little hub, then for sure I'm going to have the physical presence and sales of Utah that are going to be taxed for sales tax. But then every other state, I'm only going to be charged on the business that I do. And each state has a economic threshold that if you stay under that, you actually don't have to pay sales tax. But if you go over that, then you pay sales tax on the overage of that economic threshold. So a lot of softwares will help you track your economic nexus if you are only working in like one physical location. But if you have like 5 fulfillment centers, then you should be paying tax in 5 different states because you have a physical presence of where your business is listed there. And so it's a unique situation depending on state, depending on how you do business, depending on what you sell. Because again, the sales tax is also on products that have not been collected sales tax. So sales tax can be met a handful of different ways. So I know Darren buys a lot of his products at wholesale, which then he turns around and sells to another party. And so sales tax has not been met on any of those products until Darren sells it to the end user. Now, if he was paying sales tax on all the products that he's ordering, not marking them up and turning around and directly selling them to the end user, he wouldn't have to pay sales tax because sales tax has been met on all the products that he's purchased. And that's the rule here in Utah. Some states also have another rule that if you paid sales tax on it and it was ordered in another state, they also want to cut. So it's very convoluted. It's very complicated. It varies depending on state. It varies depending on how many transactions and how much sales you're doing in different states. But the easiest rule of thumb is looking at a product. Has sales tax been met on this product? If you can answer yes, then you could look at it and say, do I need to pay sales tax on a product that's already had the sales tax met in my state? If so, figuring out what that is. If the answer is no, then you don't have to. If you answer no, sales tax hasn't been met on this, then you need to make sure you're calculating the sales tax. And that's a very easy tax to pass on to the consumer. So, like, you know, I order 1,500 pens from Darren. Darren marks them up, charges sales tax. He passes that he passes that tax on to me. So I'm paying the sales tax for him. He just has to turn around and file a report and pay the sales tax that he's collected. Also, too, there's no rule on collecting a little bit more sales tax than what it is because some places require you to pay based on county, municipality, city. Luckily, here in Utah, we only pay for where we do business. So, like Darren could do business with, you know, 20 different counties in the United States or in the state of Utah, but he doesn't have to worry about uh, where he's shipped to in this county or where he's shipped to in this county. It's only based on the county where his physical presence resides. And so, again, having a professional help you navigate the waters of sales tax, because like Darren said too, there's different filing requirements. Usually depending on how much you're going to do in product sales, you may only have to file annually. And then once you hit so much in sales tax collected, then you'll move to quarterly. And then sometimes you'll move to monthly and back and forth on that threshold. Uh, you know, Making sure that if you are shipping to other states that you're tracking that economic threshold because, you know, you don't want to get penalized for an out of state nexus aspect because those are brutal. Those are worse than the sales tax penalties of your own state. Uh, then there's negligence involved, and they could argue fraud as well. So making sure you're staying up on that is super important.
And do you guys help with that? Is that something that you help with?
Yes, absolutely. So, if you're a big enough conglomerate where you're shipping and hitting the economic threshold for Nexus in multiple states, we usually will recommend another company that real that's all they do is sales tax day in and day out. Uh, if you're a small enough venture that we're for sure handling it in the state where you reside and you start to hit economic thresholds in a handful of states throughout the year, then we would be a great fit for that because we can help you navigate all those waters. And it's still more cost effective for you to hire someone like us to do that in that small scope. Once you get to where you're filing across multiple states with multiple timelines, like some states you may be quarterly, some states you may be monthly, it's best to have a company that's advocating for you that's all they do. And we have a couple different companies that we work with that's all they do. And so and then we can be on your team working with that company as well to make sure that nothing slips through the cracks. But uh, once you get to that size, then we would pass you on to someone that's all they do and can help you with something like that and provide more of a professional oversight. Than what I would be able to do just handling it as needed as opposed to being more on the offensive. So, but yeah, absolutely, that's something we help with.
So the other complex thing, at least for me and some of the other people in the Crit fam, um, W-2 versus 1099 for like employees, contractors. What advice can you give people? I know we have some that are just solo operators looking to grow. There's people like me that I have one employee right now. I've got another one that's starting. I've got one contractor that's overseas. Um, can you talk a little bit about that, just payroll in general, W-2, 1099?
Yeah. So this is another complicated one, just like mileage and sales tax and all these. So you're asking all the right questions. It varies depending on state. I just this week uh, alone, I did two Department of Labor audits with the state of New Jersey for a client that we have out there. That we argued for hours that the particular person that they were using should have been held to the contractor status. But the state of New Jersey was arguing that they were an employee. So understanding the state that you're operating in, what the employment law handbook says, and if you're super sticky on this, it's definitely worth an employment lawyer $400 consultation to really iron out what you're doing and if it's could be argued as a W-2 employee or as a contractor. Now, in most cases, it's not hard to tell. Like if you're dictating, hey, you're going to be at working for me Monday through Friday from 9 a.m. to 3 in the afternoon. You're going to be working on all company related equipment. You're not really able to have another job because of the hours that we're requiring of you, so on and so forth. That meets the eye test of an employee. If you're bringing people on periodically to do odds and ends jobs, even if they're using company equipment, but there's no dictation on schedule, or it's like, hey, I have these three jobs, they need to be done by this date, and there's really no depth. There's no, hey, you need to be here Monday and Tuesday to work on this job. You could argue that those are contractors. A lot of the time, if they're working on products that you're shipping out or working on things that you're doing for an end user, unless it's like a holiday rush or, I know Darren works with a lot of pens. So if he got like a, you know, 250,000 pen order, he may need to bring some people in to work his machine around the clock for the next, 2.5 weeks to be able to deliver that order. So that would be a contractor because there would be a specific timeline that the job would get done, and then there would be no engagement of services after that particular project was done. But if you're bringing people on for like we would be like if you were to hire us, we're contractors because we're an outside service that isn't dictated by your day-to-day schedule. We're not working on company property. We're not working on company equipment. So it's just picking and choosing what it is that you're doing. Now, if you have someone that's working part-time that you don't really dictate their schedule, you don't really dictate what they do. It's like, hey, if you were to come in and do X, Y, and Z, and it's just done by the end of the week, and there's no real uh, responsibility or performance or anything that's being measured there, you could probably get away with someone being a contractor in that regard. But um, looking at it, if you were to look at it from an outside perspective, what does it look like that they are to this particular business? Are they an employee, or do they have the freelance opportunity to be a contractor? And then using your judgment to do so. So,
So that I guess works really well with like overseas people, like the VAs that people get. Like I I consider the guy that works with me a contractor. He's in the Philippines.
mhm.
I requested that he work my hours so that he's available, and I pay him just a weekly s- sum to work for me, but I don't like I haven't restricted him from working from someone else. Like honestly, I don't know if he does or doesn't, but
Well,
what
and
what would be, I guess, a good litmus test in like that type of
yeah.
situation?
So anyone overseas is going to be a contractor because you can't pay a foreign individual U.S. wage or a U.S. thing. Like the W-2 that we get at the end of the year or the 1099 we get at the end of the year is for an exchange of U.S. currency for that other person to report on their taxes. And so the 1099 is a reporting of U.S. based income so that that person can report that U.S. based income on their tax return as a contractor, and the W-2 is a reporting salary on the other person. Now, if you engaged in outside services from offshore countries, all of those are going to be they're all going to be contractors to a degree because they're not U.S. citizens that would be required to file a U.S. tax return. And most of the companies that you're engaging with for those offshore services or the contractors that you're working with, there's a platform that's doing the currency conversion because you're willing to pay them U.S. based dollars to do the jobs that you're contracting them to do. However, they're receiving money in whatever the current currency is in the country in which they're residing. So anything like that, and a lot of those offshore companies, like you are they practically are employees of your business for the most part, depending on how many hours you're working them, because you are dictating the hours. You request they work the hours of your company. You're providing company-based equipment, whether it's the ability to answer phones or work on your softwares or do different things remotely. You may be providing a VPN so that they can even access certain US websites and things like that. But because they're offshore, they're always going to be a contractor. So,
So some of the other questions, specifically for like print shops, what do you think are some of the most overlooked write-offs?
um, home office is always one, regardless of business, that's either underreported or not reported and overlooked. Um, Taking the time to understand the automobile, again, whether you're taking mileage or taking actuals, and setting an accountable plan out from the time that you start working to make sure that you're getting the deduction that's going to best benefit you. Uh, Travel, like if you're taking not taking enough advantage of trade shows or things like that, if you're prepaying for samples, I see a lot of people that are buying samples. And a lot of the time when I say buy samples, people are thinking of reaching out to other companies. Like I know Sanmar and other big companies will provide samples to you guys, but how many times are you paying for samples? Like, are you going to the store and purchasing a cup or purchasing a pen or purchasing a keychain or a shirt or things that you're using as market research to see how your product would look with this or with that? And are you deducting enough of those? I know you have a ton of test cups that you're doing etching on that have like 30 different labels on that or company logos on them because you want to make sure that you have the uh, hole for it and all this stuff. The are you're on a cash based accounting, so you're getting the deduction for that, even though it's considered shrink. But are there samples, or are you going out and buying things that could be considered a sample or uh, market research that you're missing the deduction on there? Health insurance is a big one that people don't realize. You can't write off the medical treatment. So, like if you went to urgent care, you went to the ER, or you're purchasing prescriptions at the pharmacy, those are not deductible. But if you're paying for, Blue Cross Blue Shield or different types of insurances, a lot of time the medical premium, the monthly premium you're paying for that insurance is deductible. That's a big one. Um, Depending on how you have your company structured from a retirement standpoint, if you're making IRA contributions, those could potentially be business deductions that a lot of people don't realize. So those are the biggest ones: home office, mileage, or automobile deductions. And then just, you know, a lot of people miss a lot of deductions. And so until we can get our hands on their financials and comb through it, helping them realize there's things that they're already paying every day out of pocket money on that could be repurposed as a business expense. And so I usually tell people to keep their eyes open when they go to doctor's offices, to grocery stores, to the mall, to car dealerships, to any time you're stepping in somewhere other than your own house. Uh, Look around, be observant of all the different things that are going on around you. I was in a car dealership this last weekend, and they have popcorn, and they have soda, and they have water and a coffee bar, and granola bars and things like that. Those are all things that business is deducting. So how can you look at some of these other resources? And yeah, an auto dealership is a large corporation, but you're privy to those same deductions, just on a smaller scale, whether you have an employee count of 4 or an employee count of yourself. Making sure that you're taking the appropriate percentage of deductions that you're allowed, that every other business is allowed to take as well.
So the opposite of that, what are things that you see people try to write off that you actually can't?
Yeah. So I see a lot of people write off every vacation they ever go on. And that's a no-no, right? Like, give yourself that audit of, okay, we went on 2 family vacations this year and I wrote them both off through the business. That's not going to look good. Obviously there's business related travel. If you're going to trade shows, if you're going to, um, you know, whatever else it may be. Like for my travel throughout the year, I usually go to a leadership conference and then 2 accounting conferences. I also have offices in other states other than the one I reside in. And so there's for sure 100% business travel. That's unavoidable for me. But then at the same time, like every company goes on corporate retreats, right? And those corporate retreats are usually able to bring at least your spouse or plus one, sometimes your family. And so looking at those and say, okay, this is my corporate retreat for the year where I'm unplugging. And a lot of those corporate retreats are or president's clubs or whatever you want to call them. There's no work being done on those retreats. Now, making sure that it's within reason, right? If your business did $50,000 in sale and you take a $30,000 trip to Hawaii, it'd be hard to argue that that was your corporate retreat. Now, if you're doing, three to $400,000 in top line sales and you have a $5,000 company retreat, that's not outside the realm of what you can consider realistic for that type of deduction. Um, and so then sometimes the corporate retreats or president's clubs are just to reward the highest earners, or it's the C-level suite. So like if you have 5 employees, you don't have to necessarily take all the employees on the company retreat. You could just say this is for the CEO. Well, or this is for my C-level C-suite executives. Well, if you only have one C-suite executive, i.e. yourself, then you're the only person that has to go on that vacation. You can certainly do things with your employees to help build morale or build culture, whether you're doing a day trip from to somewhere and putting them all up in hotel, travel, accommodation, or reimbursement, and whatever the activities are that you're doing for team building or culture building, those would be deductible if you wanted to do something like that. But family vacations over and over and over, like just writing every vacation is the biggest one. Uh, I get a lot of people purchasing clothes just because you have to dress nice to go to your particular office or wear, you know, unless you have to have a specific related item of apparel for your job that you wouldn't wear otherwhere else, like steel-toed boots, hard hats, uh, people in the medical practitioner area that have to buy scrubs, things like that. Those are a deduction because they're very industry specific. But like the clothing I'm wearing, like I could wear this personally or at my office, so it technically should not be a deduction. I buy a lot of branded material from Darren so that I can write off a lot of the t-shirts, the hats, the sweatshirts, things like that, so that um, if I'm going to buy 5 sweatshirts for the winter, I might as well just put my logo on them somewhere so that I can uh, deduct that as an expense. But if I were to buy the sweatshirts otherwise, those technically are not a deduction. Um, a lot of people think if they remodel their house, even though their office is nowhere near the remodel, that should be a deduction per the home office deduction. Um, but yeah, those are probably the biggest home remodels, clothing, and vacations.
So just brand everything.
Yeah. Well, you could. So,
Can I put my company logo on my kitchen cabinets and that
sure.
justify it?
Yeah. So, but
Let's
in the kitchen cabinets, unless you're literally etching it into the kitchen cabinets, is probably going to be a sticker, which then the sticker would be deductible, but not the cabinets.
I have lots of lasers, so I can engrave my
You
logo
do.
on it.
You're one that, I would be the one buying the sticker, and you're the one that has the capability of, lasering it into your counters.
So we're over an hour, but we still have a few more questions. They're kind of all somewhat related, so I'll just go ahead and forego those. Any last kind of recommendations or advice for people? Again, I'll have all of your information down in the description so people can reach out to you. Is there any like specific offer you have for people or
Yeah.
any last words, I guess?
Yeah. So obviously, anyone that reaches out to us will provide a discount because of just the working relationship with Darren. But I can't necessarily say what the pricing would be because we truly make sure each package is customized to the uniqueness of the business. So if you're wanting, you know, full CFO level work from, meet monthly tax planning, the whole bit, that pricing is going to be something different than if you're just wanting the basic bookkeeper to provide you with a financial packet with record reconciliation and categorization. So, and we have some that, depending on how small you are, you may not need something on a monthly basis, or if you want it on a monthly basis, we have a quarterly package that we could break out into monthly payments. So long story short, we have a variety of services that we can offer at a la carte prices. And, if you reach out to us and decide to work with us, then we'll pass a discount along to you, just through the relationship that we have with Darren and making sure that you're going to get taken care of.
Any last tax financial advice for people just as a sign off?
Yeah. So it's November already. I don't know when this particular podcast will launch, but we're recording in November. That is close to the end of the year, and also just with the holidays and whatnot, availability is sparse. But uh, whether it's me or whether it's someone else in accounting, if you're looking to do certain things, there are some tax strategies or tax implementation tools that expire at the end of the year. And so act sooner than later if you're wanting to just a consultation. We offer a complimentary consultation. So any one of you that's listening that wants just a phone call or a consult, that is offered at a complimentary rate. And so we would definitely uh, at least through that initial conversation, determine whether or not you're needing help or if you're in a good spot. But I wouldn't wait too long to do that because there are some things that you may miss out on um, by pushing this down the road. But the biggest piece of advice is it doesn't hurt to talk to somebody. Uh, no matter how nervous you are, no matter how anxious you are about your accounting or your taxes or anything like that, you know having the conversation will probably 9 times out of 10 ease your mind and give you the peace that you need about the subject. And then it starts that friendship and that relationship to where now you have someone advocating in your corner that can help you through situations much like today, where Darren had something with workers' comp that we're going to be able to squash, within a 24-hour period, and make sure he's taken care of. And so, the biggest piece of advice is don't hold it in. Just reach out to someone, whether it's me, my team, or someone else that you've been thinking of engaging in services with, and start that process, because uh, you'll find that it's not as scary once you dig in and start doing some stuff.
Well, I definitely appreciate you coming on. I definitely know that that's true because, like, today with my workers' comp thing, like, my insurance guy's name is also Josh. And I called Josh and was like, Josh, I screwed up. And he was like, "Well, what's going on?" And he's like, "Oh, that's nothing." And here I am, like, almost having somewhat of a panic because it's like I got certified mail, I had to sign for it. What's going on? And my 2 Joshes on my team were like, "Yeah, this is no big deal. Like, why are you even stressed about it? Like, we'll just get this taken care of. Here's the documents you need. Here's the proof. Like, send it off. You're fine." And it just is great to have people on your team that help you out. I do highly recommend Josh. Like I said, I've been using him for years. We'll have all his information down below, but at least talk to someone and start building and getting yourself taken care of because it's a huge weight of relief to remove that burden. And as someone who does way too much in my own business, it's good to be able to hand something off and not have to worry about it anymore. And Josh has done that multiple times with just my accounting, bookkeeping, taxes, sales tax, and it is a great help. So thank you guys so much for watching, and we'll see y'all on the next episode.